Okay, moving along to capital gains tax, which is a big one.
Huge.
And understanding the fundamental changes. So what is the biggest change to capital gains tax and why does it matter?
Yeah, so these changes are reversing structural changes that were made back in 1999 that introduced the 50% CGT discount. And back then, there was a concession called indexation that applied when there was a capital gain. And what that meant was that the cost base for the purchase of CGT assets would have an automatic indexation applied. When that was cancelled, they introduced a CGT discount, which was a flat 50% reduction on the capital gain for individual and trust taxpayers. And it applied to most assets and meant that you would only be paying tax on half of the gain, essentially. These changes are going to reverse that and bring back in the original intent of the law that was there in place in 1999. And we'll talk about some of the detail from here.
Yeah. So speaking of which, how does indexation work? I guess you have and compared to the 50% discount.
Yeah. So it's really a fundamental change in the way that the gain is calculated. What we'll be seeing here is that the cost base, which is the purchase price and all the ancillary costs that go into the acquisition of a CGT asset, are going to be indexed for CPI. We're not quite sure what the rate will look like, but that will be provided each year and means that really only the real gains, as in those gains above inflation, are going to be taxable.
Okay. And in your opinion, will indexation be better or worse than the 50% discount?
Look, in a lot of cases, it is going to be worse. The reality is it's going to depend on the circumstances. In periods of high inflation, and particularly where you've got long holding periods, it may actually result in a better outcome. In periods of low inflation or for shorter term holds, you'll definitely see a more adverse impact.
Okay. And when does exactly this change take into effect and what are the transitional rules?
Yeah, so it's quite a critical date. This is a change that's coming in from 1 July 2027. And there is actually going to be a split, so a split calculation for assets that are acquired before that date, which means there'll be a degree of complexity in the capital gain tax calculation. We'll be able to apply the discount up until that date. Mm-hmm. And then from that date onwards, we'll be able to apply indexation using market value assessments.
Okay, so if a client sells an asset between now and June 27, do they still get the 50% discount?
They do, yeah. So from budget night, which is 12th of May 2026, through till the 30th of June 2027, they'll retain the full CGT discount, keeping in mind that capital gains tax is calculated on contract date, not settlement.
Okay, and in what happens if I or a client buys an asset before July 27, so not one that they've already hold, but a new one, and sell it after?
Yeah, so we'll have this split calculation that's going to be required. The 50% discount will apply on the gains that are relevant up to 1 July 2027. And then from 1 July 2027, indexation will apply on the cost base.
So maybe a little bit of a benefit. So it's the date that you've acquired.
It is, yeah. Yeah.
Okay. And how do I value my assets as at 1 July 27 for the transition rules?
Yeah, there's going to be a couple of valuation options. Probably the most common one will be to obtain a formal valuation or alternatively use one of the ATO apportionment formulas that they're proposing to develop. This will be a good opportunity really, particularly for property holders to consider reaching out and getting specialised advice, including our LDB property team who are doing a lot of valuations for clients already in the SMSF space and will be focused on getting the right valuation for clients on this special day.
Okay. And what is the 30% minimum tax on capital gains and who does it affect?
Yeah, this is quite an interesting one. It is going to be affecting all taxpayers that are individuals and trusts and is going to apply a 30% floor to the capital gain. So this is outside of the marginal tax rate. It does mean that it's really going to impact lower income participants and lower income asset holders. And those who are on higher incomes will still have the marginal tax rate apply, which will typically be higher than that that 30%.
Okay. And is anyone exempt from the 30% minimum CGT tax?
At this stage, they have indicated that anyone that's on a means-tested income support payment, so something like the age pension or job seeker, will be exempted from the minimum tax as long as they've received a payment from one of those support services in the year that they realise the capital gain. Realisation being, of course, that contract date.
Okay. And does the CGT change apply to my family home when I sell it?
No, at this stage, the main residence exemption is still going to stay in place and will continue to remain there unchanged.
Okay. And does the 30% minimum tax apply to capital gains in my tax return this year?
No, so it's only going to apply from 1 July 2027 onwards, which is the 2028 financial year is how we refer to it in accounting terms. So it's really going to be a future change, something to be mindful of.
Okay. And what about investment properties? Are they affected by these changes?
Yeah, so they are going to be fully affected. Investment properties will be subject to indexation and the 30% minimum tax from July 2027.
Okay. And do the CGT changes apply to other investments, or is it just property?
They do. They're going to apply to all CGT assets. So that's including shares, commercial property, even collectible assets.
And what happens with the pre-1985 CGT assets that were previously exempt?
Yeah, so part of this regime change is going to be bringing all of pre-1985 CGT assets into the CGT regime. It's quite a significant change, albeit there's probably not that many clients that have assets from that era these days. They're getting less and less common, which does mean that any capital gain that's accruing from 1 July 2027 on these pre-CGT assets is going to be taxable under the transitional rules, and again will require a form of valuation.
Okay. And is there any special treatment for new residential property bills?
Yes, this is one of the interesting carve-outs that the CGT discount is actually going to remain on for a period of time, and assuming there are no further changes. So for new builds, they'll be able to choose between the 50% discount or indexation, and that decision will be made when the property is sold.
Okay, so essentially 2 capital gains calculations to decide the right outcome.
That's right, yeah. To get the best outcome for a taxpayer, we'll be looking at both avenues of calculation.
Okay, one that's been asked quite a bit is what about the small business CGT concessions? Are they affected?
Yeah, look, it's a bit of a lost opportunity. They are totally preserved as they are at the moment. They are quite complicated, and so having them remain as they are unchanged is a little bit of a problem. We would have liked to have seen a little bit more of a relaxation of some of those rules and make them more commonly applied to a lot of the sorts of CGT events that can apply to small businesses.